Very, hang on, let me start again. Hi, everyone. Amy Bach, Executive Director of United Policyholders. Just so happy to see all these important stakeholders, powerful partners, and hardworking wildfire risk reduction and insurance security advocates. So I'm going to give another minute or two for more folks to join, but really pleased to see your faces and to welcome our presenters today. And before we do that, I see people are still joining, which is great. I'm just going to lay out a little bit what we're going to do today in this session. I'm going to give a little intro, kind of a PowerPoint that recaps a little bit of where United Policyholders has been recently, and an event that we participated in last weekend that I thought was extraordinary. And then we will be hearing from our great friends at the California Department of Insurance. We have Julia Juarez and Mike Peterson here, and they will be walking us through some of what's on a lot of people's minds today. How are we doing with the one of the two primary goals of this working group, which is to secure financial rewards for people who invest time and money in property improvements and community work that reduces risk at the parcel and the community level. The other piece, that's our all of our longer term goal is bringing more competitive options back to California property owners, bringing property insurance costs back to a more realistic level for people in brush heavy areas, and helping people get more security that they're going to be able to hold on to their insurance and not have to scramble and not have to be in the FAIR plan. But today we'll be focusing on the progress that we have made as a result of a lot of our collective activities and the leadership of Insurance Commissioner Lara and his team. So first, I'm just going to walk us through a little PowerPoint, and I want to acknowledge my team. We've got Joel Loucher, who's part of Team Up, as well as Ben Laterno, who's here filling in for Emily Rogan, who's covering an event today up in Sonoma. We also have Val Brown, my deputy, with us today. And then a lot of superstars who I can't really give time to today, but who I have to acknowledge: Steve Quarles, who's been a pioneer in risk reduction for many years. We've got Kate Stillwell, who's innovating to create parametric palliatives, I'm going to call them, for people who either have high deductibles and or want to get earthquake insurance but are not quite ready to jump in with the full policy. And there's lots of other superstars with us, but that's about all I'm going to call out for right now. So let me just clumsily share my screen here for a minute. We're going to go, hold on. We're going to go to the beginning. And this is really just to set the table on what we're here talking about today. This is kind of a little bit of a version of what I showed at the Ember Stomp event on Sunday, to sort of boil things down. So these are the talking points that we're using at UP, that reducing risk equals dollars and cents, that your home's less likely to burn, you'll have better options for keeping your home insured, you'll qualify for premium discounts, but that this is a work in progress, and there's more help on the way. Obviously, with the moratoriums expiring, people in certain areas where there have been fires, such as Sonoma, Napa, lots of other areas around the state, are continuing to experience challenges with high premiums, few choices, non-renewals. and nothing that anyone is going to be a surprise to anybody here. But I do like to remind people that a combination of forces are to blame, that no one person or government agency is to blame. And that combination of forces includes the series of bad wildfires that we had here, insurers' profit goals, which of course, all of you probably realize that in interest rates have been low on investments, so insurers haven't been earning as much on their investments as they had been in the past, and that's a factor. Inflation is a factor. InsurTech is a factor, where insurers are buying all kinds of tools now that really allow them to see all the warts and all the risk factors that they were heretofore that weren't as visually compelling to them. And then the global problem with reinsurance being very expensive right now. So I just like to remind people of that, because in my travels, I often hear when I converse with insurance companies and, dialogue with them about, why can we get you over a 5% discount, and they always want to kind of point fingers. And I just don't really think that is a productive way to continue to move forward. So that's why I mentioned that about no one person is to blame. All right, so we all know why we're here and what's going on with this project, a convening of stakeholders. I've already talked about our goals. We've all kind of more or less gotten on the same page about improving your home's chances of surviving a wildfire and what really needs to be done there. And now I think a lot of us are focusing our efforts on finding funding to help households make these improvements, to educating people about things like interrupting a wood fence, to prevent the wicking factor, and then trying to help people understand that your home can still look beautiful even if you have to clear space around it and move treasured plants. This event that I went to this weekend that was so inspiring was co-hosted by Fire Safe Marin and the Marin Wildfire Authority. We all heard from Mark Brown, who's the ED of that authority. Just a lot of really good ideas at this event. Very well attended. What the Novato Fire did, our Chief Tyler, who has presented to us as well, did this really smart thing. They had scheduled an evacuation exercise, and they had the evacuation exercise end at the fairgrounds where they were having the event. So they ended up getting 5,000 people, they estimated, at this event, which is, I thought, would inspire everybody on the call. They had some demonstration landscaping. There's me and Ben and one of our RAP members, Neil Peterson, at our table, promoting the work that we're all doing together. There were some wonderful young ambassadors talking about Firewise landscaping. We had our friend Kelly Reclumpus with her brand guard vents there, showing also a gutter guard, more illustrations that your place can still look beautiful with fewer plants. Of course, in that area, they are fortunate to have done a bond measure, which allowed there to be free mitigation inspections. But of course, in a lot of areas, we don't have that luxury. And so we're looking to a lot of the innovators that are making themselves available to people to give them a prescription of, you should do this, this, and that. Our partners at the DOI are continuing to keep their website up to date and identifying companies that are offering discounts for fire hardened homes. We're seeing more and more communities getting the Firewise designation, which I think is a really good trend. And then the IBHS is continuing to promote their program. Thanks to a grant from the Governor's Office of Emergency Services, we were able to create our RAP Resource Center, which we walked you through at the last meeting. And that Resource Center is up and running. And I want to remind everybody, on this call to visit it, to give, and if you find things that we're missing or you find something that's wrong, please email Emily@uphelp.org. And if you don't remember that, info@uphelp.org also works. And then just to reinforce our messaging that we're putting out there, that even though insurance is more expensive than ever, it's still important to insure your assets to value. And to that end, UP continues to offer free resources to help people shop. On Friday, June 9th, I will again have a panel of insurance experts, agents, and a representative of the FAIR Plan offering a webinar, but we'll have it'll be recorded if you can't attend in person. And we'll be we've been doing this about every 6 months or so, just trying to keep tabs on who's selling where and what's going on. And since a lot of people have questions about the FAIR Plan, we will be explaining that as well. Another reminder that that it's just really important to keep your coverage A limit up to date with current construction costs, and that the 3 features that disaster survivors find most valuable and often don't have enough of: extended replacement costs on their dwellings, coverage to bring their dwellings up to current codes, and then replacement cost on contents. And to our friends at Listos, which is another governor-sponsored campaign to promote preparedness around the state, lots and lots of information. So I just wanted to kind of walk everybody through that. And now we're going to move to Julia and Mike. Thank you so much for being with us. Mike, a deputy commissioner, I think Julia also a deputy commissioner. And we're just honored to have both of you. You know, we're very fortunate in California to have an extremely responsive regulatory agency. A commissioner who gets out there, rolls up his sleeves, goes out into rural communities all over the state with his team. Mike Peterson is considered to be a leader in the all the work, a lot of the work that's being done on climate change adaptation and insurance. Mike's name is very well known. So Julia and Mike, thank you for agreeing to be here. They're going to walk us through the status of the rate filings that their agency has received as a result of the regulations that they laboriously vetted, issued, revised, and then formalized, finalized, and bring us up to date on how we are doing with our collective efforts on mitigation discounts. So thank you. Julia, are you going first or Mike?
I can go first. Thanks, Amy. Appreciate it. Thanks so much for the introduction and for the invitation to be here. As Amy mentioned, I'm Mike Peterson, the Deputy Commissioner on Climate and Sustainability here at the Department of Insurance. And my colleague, Julia Juarez, who's the Deputy Commissioner for Community Relations and Outreach. We're going to tag team this in terms of talking to you today about what we know about wildfire mitigations and the implementation of our regulations and the information that can be helpful to hopefully all of you moving forward. So really appreciate the opportunity to be here. I'm going to share my screen and sort of walk you through a presentation. And I do want to try to, my goal here in a big picture is to try to cover some of the common questions in my description of what we know, and then happy to answer more questions as a follow-up. But just to let you know that I'm going to try to kind of walk through specific details that I think are probably at the forefront of folks' minds as we go here today. So, all right, I'm going to share my screen. Okay. All right. So as many of you know, this is our title slide here. I'm going to talk for a bit with just this slide up here. But wildfire safety has been our focus point the last 4 years, and you all work with communities and neighborhoods and individuals to take the necessary actions to make us all safer. And so I really appreciate this work, and I want this information to be impactful for you and how you communicate with your friends, colleagues, and communities. The most important message that I wanted to share today is just to get back to the backbone of what we're trying to accomplish. And that is that in order for insurance to become more available and affordable, we need to be able to reduce risks to our homes and communities. And so that's why California Commissioner Ricardo Lara and Julia and I have really prioritized wildfire safety and how we've approached all of our problems. Insurance has historically been primarily about pricing risk and being a source of resilience, so providing that funding that occurs after a devastating wildfire. But what we're trying to do at the department is to take actions that change the way insurance works so that insurance incentivizes risk reduction before a disaster occurs. And that saves lives, reduces losses, and brings down costs for both consumers and the insurers themselves. Our number one priority at the department is consumer protection. And so for the past few decades, we as a department have received and scrutinized rate filings prior to their approval and those products being sold in the California markets. That's our role. We review rate filings for a number of different details, including the pricing and the overall rate and the different components that make up that rate and the justification for those components. And that's all part of what our department has historically done. And that's in complement to how we enforce state laws, how we conduct financial and market conduct exams, our fraud prevention efforts, providing consumers information through outreach, both before and after disasters occur. And so our efforts on making insurance more understandable to the public and communicating risk all sort of flow into what we're doing that's new now, which is implementing regulations that reward home hardening efforts. Over the past few years, we've been working to finalize these regulations. Your organization has been a major part of that, both through your outreach efforts, but also through developing some of those core concepts that that really are reflected and aligned with what we're rewarding in our regulations here today. So what I want to talk about today, I want to hit 4 key themes for understanding how the recent wildfire mitigations are impacting insurance pricing and the trajectory on how we will continue to monitor and see that change in the coming months and likely years. So I'll start with what exists. What do we know? What have we completed? And who's involved in those efforts? Secondly, I'll talk about what we're doing now and in the next few months, so that sort of real near term. Third, I'll discuss how we're monitoring our progress and how we'll continue to monitor it so that the department can be a source of information for your complementary efforts in your communities moving forward. Because really the full impact of this regulatory process and these wildfire regulations will grow and evolve through time. And at the end, I want to sort of make the point that, you know, we're at the beginning of what are several steps, and we need your help in order to communicate, implement, and make this understandable to the public. And so I really appreciate the chance to talk with you. You have a lot of expertise and you play a crucial role in that implementation. Okay, so starting off with what exists today, what did we do and what is the existing scenario? So in 2018, it was estimated that about 7% of residential policyholders had access to wildfire mitigation-based discount programs. So some kind of incentive. As Amy mentioned, your top goal, or one of your 2 top goals there, how do you secure incentives for taking wildfire mitigation? Only 7% of residential policyholders had access to that in 2018. So what we did as a department under Commissioner Lara's leadership is to create alignment across state agencies by launching what we called the Wildfire Partnership at the time, which brought together the Department of Insurance, Cal OES, Cal Fire, the Governor's Office of Planning and Research, and the Public Utilities Commission. We, with that group, established a consensus list of actions to reduce wildfire risks to homes, businesses, and in communities. And that led to the Safer from Wildfires framework, which we finalized in early 22, and then took that and were able to go through, as Amy stated, the regulatory process and finish the regulations in the fall of 2022 for what we call our Safer from Wildfires program. This has helped us grow momentum towards those risk mitigation incentives that insurance companies offer. And so by the end of 2022, we then estimated that 40% of policyholders had access to wildfire mitigation discounts in their rating plans. The new regulations took effect last fall, and I want to just walk you through the 3 levels really quickly. Many of you are familiar, but just so that we're at the same starting point, we had mitigation factors that occur at the structure level in the immediate surroundings, and then those that protect the whole community. And as far as how the regulation works is that there are mandatory factors. Those are required of insurance companies to reflect. But then insurance companies can also offer optional factors in addition to that. So there are companies that may offer above and beyond what the Safer from Wildfires framework has. And that's something that we also want to be aware of, because that fits within that wider bucket of how do we incentivize risk mitigation for wildfire. Okay, so I want to walk you very quickly through these factors. When it comes to protecting your home or business, at the structure level, a Class A roof, 5 feet of ember resistant zone around the structure, non-combustible 6 inches at the bottom of walls, ember and fire resistant vents, double pane windows or added shutters, and enclosed eaves. Then as you move into the immediate surroundings, cleared vegetation, debris from under decks, moving sheds and outbuildings at least 30 feet away, trimming trees and removing brush in compliance with state and local defensible space laws. Okay, very familiar to many of you, but now going to be incentivized through insurance rating plans statewide. Finally, moving out into the community, there are 2 designations that the Safer from Wildfires regulations identify. One are neighborhoods that form a Firewise USA community. And then secondly, those cities, counties, or local districts that become a fire risk reduction community, which is a program that's run by the California Board of Forestry. So that's the framework that we set forward. I want to make a few points, just an overall approach of the regulations, because most of us don't necessarily live and breathe regulatory policy every day, thankfully enough. But the main goals of the regulation are to incentivize and increase the number of homes and communities that are hardened against wildfires, especially those in the wild and urban interface, and to prepare those communities, or better prepare them, against the wildfires that are likely to come in the future. The second is to make wildfire risk rating and the scores that are used by insurance companies more accountable to consumers and the policyholders. And then lastly, that for those insurers that use wildfire risk scores or those types of characteristics to put together their premiums, in the formula for their premiums, then insurers' rating plans must also include these rate adjustments that account for each of those factors that I just walked through. What the regulation does not do is it does not prescribe a specific percentage off or discount for a particular mitigation effort or those in combination. It leaves that decision-making and justification up to insurers who rely on a combination of loss history and other factors to weight how mitigation factors into to your insurance premium. It also doesn't affect an insurer's underwriting eligibility or criteria. All right, so I'm going to move to this overall slide here. These are all the factors. As you do more, you can save more. Insurance companies were required to submit their rate filings by April 12th that incorporated this framework. It is now May 23rd. So we have, we're about 5 weeks into that. And so I can kind of share a little bit about what we are seeing and where we're going with our communication here. But I just want to leave this up for 5 more seconds to just say that, this is a framework that we, our goal had been that it would be clear and consistent and effective and achievable. And so this is what we're trying to communicate to people to do, because even as insurance rate filings are approved over the next several months, this stuff takes time. People need to be able to start working on some of the risk reduction that's going to take them several months in order to accomplish. And so we really want to keep the focus on what to do, and then I can share information on how insurers are responding to that. There's a second piece of the regulation that I also want to highlight because it has to do with risk communication. I'm going to walk you through that as part of our wildfire mitigation regulation, insurers had to or are now required to share wildfire risk scores with consumers at particular points in time within the policy process. So every insurer that uses a wildfire risk score for rating purposes is required to advise their policyholder or an applicant at these 4 timeframes in terms of what is their score. So first, within the first 15 days that the applicant has submitted their application for insurance. So that's like at the initial point. Second, with each renewal. Third, with each non-renewal notice. And fourth, within 30 days after being advised by the policyholder that the policyholder has completed a mitigation action. So there is this stitching together of knowing your risk score, taking mitigation actions, and trying to see if that can help reduce that risk score. When the insurer provides that advisement to the policyholder or the applicant for insurance, they must also provide information on the range of risk scores being used. So are you a 2 out of 0 to 5, or are you a 2 out of 0 to 100 is a meaningful piece of information for a homeowner. Second, what's the policyholder's position in that range? High, medium, low, within that range of numbers. Third, a detailed explanation of why the policyholder or the applicant received that assigned score or classification. And so that's going to provide specific references to the features of the property that influence the assignment of that score or classification. So it provides more knowledge that empowers our policyholders on what their risk is and what they can do. Fourth, what measures could you take to lower that risk score? And then fifth, the amount of the premium reduction that the policyholder or the applicant would realize as a result of performing each of these measures under that insurance company's rating plan. So all of this sounds really detailed and technical, but this creates just an ecosystem of risk knowledge for policyholders. And I think that I don't want this to get lost in our focus on rate filings, because I think that this is part of the process, is understanding what's causing fire risk, understanding what will de-risk, and then understanding those incentives and kind of being able to put that together. And I think this is just a really important source of information for all of you, for how a policyholder would know whether they are getting an appropriate insurance incentive. And when they start shopping around, potentially, what are the right questions to ask their insurance companies or their potential insurance companies as they're figuring out what would be the best policy for them, what are the best options for that policyholder. So if a consumer is unsure after looking at the Safer from Wildfires program, or they get the information about the risk score and they're unsure about what that means, they can contact their agent or broker. If they're not satisfied with that response that they get from their agent or broker, they can always contact our consumer hotline at the Department of Insurance. So there's the core information I wanted to share on what's in the regulation. I want to move now to what are we doing today? Where are we as of right now? And so as of May 15th, my department has received over 320 rate filings, over 200 for commercial lines and over 115 for personal lines, which includes group filings. And so we have several hundred rate filings that came in as expected and as required for those companies that are using wildfire risk as a rating factor. And so our process is going to be, as we've always done, going through as efficiently as possible and as thoroughly as possible those rate filings to review how insurance companies are approaching these regulations and what information is useful for, zipped ahead there. What information is useful for the public, because we really want to be a source of understanding for the public, because that's how they're going to be able to understand how to take actions that make their homes safer, their community safer, and achieve these discounts. So based on the information we have today, there's a few things I think that I want to highlight that are of interest. The first is that if the forefront question is like, what is the level of discount we can expect from this? you have to understand or you don't have to understand, but I would ask you to understand that insurance companies, as we've found out, sometimes apply a discount to their overall homeowners premium and sometimes apply it to just the wildfire portion of the homeowners premium. So you have a couple of moving targets here. One is the overall homeowners premium. The other is your wildfire portion does move with your risk score and other wildfire related factors. And so we're going to be trying to identify how to make sure that we are comparing apples to apples and not apples to oranges, as certain companies have filed rate filings that take different tax on where the premium discount occurs. It may take some time for those benefits to show, as far as which companies are offering the right mix of incentives that fits with a particular homeowner's characteristics of their home. So anyway, so that's one key factor. The second key factor is that is to remember that our regulations require that the mandatory factors are reflected in insurance company rate filings if they're using wildfire risk. So those are mandatory factors, but we don't prescribe whether combinations of factors or doing all of the above has an additional incentive built into it. And so those are the kind of big picture questions that we're going to be tracking as these rate filings go through our process. Is how do we communicate the individual ranges of how insurers are approaching individual factors, but also the combinations of factors, because for many people, they will be looking at combinations. They have a certain type of roof, they want to add other things. IBHS has a wildfire prepared home that they've published, and that is a combination of factors. And so I think that information is something that hopefully we can make understandable to the public. But as that moves forward, I think that there is a lot of power in what policies have, what policyholders have within their own capabilities, which is that they know who their insurance company is and can contact their insurer to identify what are some of the actions that they can take that affect them individually. And so I think that one of my biggest messages today is that the department's going to be trying to figure out in aggregate what's going on, but really decision making happens at the individual level. And so the more that we as a department can help inform and empower individuals to talk to their own insurance companies and figure out how to achieve the best options for them, that's going to be a really powerful process moving forward, because that's going to be what allows consumers to locate and find the best incentives that fit your property. And I think that that's a message that hopefully many of you are involved in wildfire protection, wildfire risk reduction, that's sort of a clarifying way to go about talking with public groups that you talk to. Okay, so the third thing I'm going to hit on, and then I will wrap up here and pass over to Julia for a few more points, is that how are we going to monitor this progress going forward? So as Amy mentioned, we have this website that has companies that offer current incentives on it, and you can find those companies, find their programs, identify what those incentives are. We also are going to have a growing number of rate filings that move through our approval process from under review to approval. And so we're going to be trying to communicate what exists and what is recently approved as best as possible. That's going to take some comparison, like I said, of the different ways in which insurers approach this. But I think that we have a outreach system set up and kind of I guess I'd say an overall approach that I think we'll be able to communicate what are the questions you should ask your insurer as you figure out how to best get the most incentives for your property. Then finally, where are we going to go from here? So as we move forward, there's an important aspect here is in our outreach to whole communities, because there are actions that you can take at your individual property, but there are actions that a whole community has to take together, and they aren't sort of, at least at this point, they're designations. they're becoming a wildfire community, becoming a fire risk reduction community, and that takes collective action. So I really want to emphasize that, especially for those communities that are harder to reach, that maybe haven't been coming to public meetings, finding ways where we can outreach to those groups and make sure that they know about the Safer from Wildfires framework and those incentives is going to be crucial over the next, I'd say, 6 months to 10 years. Because we still, as a department, go to plenty of meetings where this is all new information. And I think that, this is a very focused group. I'm been very focused on wildfire for 5 years now. But if you think of like the communities that are out in the state, this is an overwhelming issue. And this is a very helpful way to focus attention, is to be able to share information like this. So I appreciate all that you've done. And I encourage you to continue to do more, because there are lots of communities out there that have yet to hear about some of the incentives that will be becoming available, and do want to work towards being eligible for those incentives when we get there. And then the last point is just that, because this is a requirement statewide for all insurance companies that rate by wildfire risk, it means that it's somewhat of a portable situation. So if you move from one company to another, or you're in the FAIR plan and looking for a company, all these factors are consistent. They're not going to be consistent in the exact incentive that you get, but they're going to be consistent that they're going to be an incentive there. And so it does really allow us to say, like, as you look around for insurance, we're at whatever stage you're in, whether you have insurance, you're looking to change, these factors are relevant to you. And there's many things that you can do within your community and with your local fire districts or fire chiefs or fire safe councils. So that's where we're kind of going from here. With that, I just really thank you for the chance to let me talk for a bit on that. And I'm going to pass to my colleague here, Juarez, to take us through a couple more points, and then we'll be happy to answer questions. So Julia, thanks very much. I'll pass it to you, and I can drive the slides.
All right, thanks so much, Mike. It is a pleasure to be here with you. I have the honor of working with many of you, in particularly with the community relations and outreach branch of the Department of Insurance. So we have folks throughout the entire state who work with individual communities. So if you want to go to that slide, Mike, we can share. Our branch has, since 2019, Amy joined us for a lot of these meetings. We had virtual events and in-person meetings where we went to talk to folks, and find out, what are the issues that they were really, grappling with. And so that really did help us to educate us on, how to reach these folks and how to talk to them about what we can do to help. So since 2019, we have met with, over 150,000 folks in counting, with, over 875 virtual and in-person events in all the counties in the state, because we also know that this issue is not just a Northern California issue or a rural issue at all. It's a statewide issue. And so we have our folks, and we are trying to, work with all the communities to really help to bring this message across, that these are the things that we're doing, that we're, to help. It is not something that's going to bring prices down overnight. And it's not going to be, something like that, but it'll definitely be something that will help, and can really, if a whole community works together, we can make a difference in this, and actually really start, working on the entire industry as a whole for local communities. So what we do is we partner with you. We partner with local areas, with local organizations, fire safe councils, and all the different types of organizations that are working out there in the community. And we share this information with their members or with their local areas. And so here you have just a sample in April of all the different groups that we met with, that we went and shared this information with. And so we want to partner with you. Every community, every county has a particular representative, a liaison from the department that is very much so, available to you to work with you to get this information out to local communities. And so if we have some materials that we can share, we can have our folks go and make presentations at different groups, or just pass information out at particular outreach events that local communities may have. The other part of that is we also want to partner with you, with your local community on helping to see, what else can we help you with. And so of that, Mike, we can go to the next slide. And on that, we want to make sure that you also know that we are available to help with letters of support for any type of grants that you might be applying for. All the different grants. What we do is we work with Mike's team to review your applications or your scope of work and what you're looking at to make sure that we can help support that, and we submit letters of support with that, so that your applications have strong support on that. So we make absolutely sure that we make ourselves available for you on that end. And so want to make sure that you know how to get a hold of us. You can obviously call the 800 number for the department, but also the Community Relations and Outreach Branch on email. It is just CROB@insurance.ca.gov, and we can certainly work with you there. And we also have the listing of our local liaisons that I can share. I'll send a copy of that file over to United Policyholders so that they can share it with you. And so that way you can reach out to your local liaison directly as well. So we are here to help, and we are here to partner with you and get as much information out there to the community as we possibly can. So with that, we are available for questions.
Well, Julia and Mike, thank you so much. And especially for that last point. I did not know that that you would do those letters. And I think that's a huge help to all of those in the RAP working group that are beating the bushes looking for funding in their community. So that's great. So before we kind of get some general questions, I'm going to hit the ones that came in to the chat, as well as Mike, you can just stop sharing, and then there you go. And then if folks have additional questions, you can raise your hand or you can put it in the chat. So I think I'm going to start with Evan Kilkus's questions, because it's sort of basic, like some of mine. When can people expect these adjusted rates to roll out? Mike, do you want to take that one?
Yeah, sorry, I'm having trouble not sharing my screen, so I apologize. But
okay.
yeah,
Nothing dangerous on there. It's pretty tame.
No, I just feel awkward that you
don't worry about it.
Questions, but so to answer your question, I mean, it's gonna feel insufficient because I can't give you a surefire date, right? But we did receive the rate filings as expected by April 12th, so that's a good step. We've sort of built out this infrastructure about how to communicate when incentives are approved and in place. So that's, kind of our department step. The average rate filing it takes about 6 months. I don't have an estimate as to whether this is going to be higher or lower than that. It's a huge priority for the department, but these are also the first wildfire regulations that we've gone through. And so I think that as hard as it is to not be able to give you an exact date, I would say that we're through the regulatory process. We have the applications, we're moving through our process, and as soon as they're approved, then the companies move to implement them quite swiftly. So I think that the best advice I can give is just be prepared, and sort of expect that whether it's later this year or in the wintertime, that there's going to be companies that are approved, and I can't guarantee the order or the exact timing, but if for those who have policies with certain companies, as soon as they're approved, they'll begin moving forward. And we'll, do our best to try to keep our list updated, but also, like trying to really empower consumers to be able to contact their insurers or their agents and brokers so that they have the most up-to-date information is also really helpful, because I think it is something where how often do you come and visit the department's website, right? Like we want to be a resource, but we also want, to make sure that you're empowered to find out that information as directly as possible as well. So yes, I'll pause right there.
Okay.
Thanks so much for the question.
Okay. So
Thank you. Thank you very much.
And for the and Susan asks a question that is pretty classic as well. I'm afraid to confront my insurance company that they'll just drop me for being a pest to our fire-wise community, built our house to incorporate fire-safe construction, but to meet the IBHS requirement would be impossibly expensive. Susan, we're hearing that, all over the state. Also concerned about the so-called inspectors who are now coming to inspect. How well informed are they regarding individual characteristics of different plants? Let me put this as a question for you, Mike, and Julia. So in the filings, the filings don't say anything about or the regs. They don't really prescribe how the determination is made that the home meets the standards, correct? It's really each insurer is going to have their own rules for what they require. Is that a fair statement?
That's correct. The regulations don't prescribe the sort of how the certification occurs, but when insurance companies bring their rate filings to the department, we will review and have certain objections if it is if we don't think it's either credible or too onerous.
Okay. MJ Lee asks if there are 119 residential rate filings, does that mean insurers are submitting more than one? If so, how are filings defined for a certain county, for example?
There shouldn't be more than one per company. There may be different lines of insurance. So you may have a company that files separate lines, and there might be multiple rate filings that way. But if you're interested in residential homeowners insurance, those are there would likely be only one per insurance company, at least at this point in time. It's good to remember that some companies did have incentives in 2022. There were several companies that are on our website that had certain home hardening or community mitigation incentives. And so for those companies, there's more of a I guess transition type from their current system to maybe adding additional factors to it. But still, I would not expect there to be multiple rate filings unless there was an interest in multiple lines.
Okay, so Stephen Watson with Ventura asked a very good question. I think probably is on a lot of people's minds, including mine. And this has to do with the risk score requirements. So is that already in effect, or is that's not pending your approval of the rate filings, is it?
That's correct. That's already in effect.
So as of today, you should be able to, your insurer should already have reached out, and or you can contact your insurer and ask them what your risk score is. And once they give it to you, if you feel like it's off base, you can appeal it, right? That's in effect now?
Yes. You can do that today. There are those kind of in the rules points, when you apply at renewal, when you're non-renewal, if you take an action, those are the point that the onus is on the insurer to provide that information. But there's also the opportunity of the policyholder to be able to request that information. And that is applicable today.
Okay. Bruce asks, and we've got several condo questions, but I'm going to ask the one that's most on point here. In my most recent condo owner insurance renewal, my insurer did not offer any discounts based on fire mitigation, but rather implied my rates would increase or coverage would be canceled if I was not in compliance with suggested mitigations, 5-foot clearance, gutter and vent covers. Is that permissible?
The regulations that we enacted don't address underwriting criteria. And so, consistent with at any point in time, insurance companies can adjust their underwriting criteria. Thanks for getting rid of my screen. But there's a process to do that. So I think that if it's hard for me to like make a blanket statement about this exact situation, but I think that there have been over the past several years some insurance companies who have, for instance, decided to only write structures that have a certain type of roof, and that's a decision that they've made. And so if you were the homeowner or the condo association, I guess owner at that point, then that could come in the sense of like, if we are choosing to only underwrite these types of structures at this point, so therefore if you don't change your roof to that structure, then you won't be able to get this policy renewed. I think that's consistent with the experience we've seen the last couple of years. I do think that as these incentives do progress and more policyholders have access to the incentive to do things, even the ones that are more economical, like replacing vents, potentially clearing 5 feet, that will make those homes more insurable over time as well. Condos are sort of a different category, but hopefully I've mostly answered your question, and I'm happy if there's a follow-up there to try that.
Okay, so let's see, couple more and I will get to Joel, I promise. Ivan O'Neill asked a question that's very specific as to, given that double paned, in the old, I don't even know if I'm pronouncing that right, glass windows offer relatively little mitigation to radiant heat versus single pane annealed glass. Does CDI imagine basing incentives on there being at least one pane of tempered glass? And I think maybe the question really is CDI getting in the weeds at that level of parsing what insurers are considering effective and not effective?
Amy, the last point is I think the most accurate and specific, and that's that the mitigation attributes of windows was something that was a factor that the 5 state agencies talked about, included in Safer from Wildfires. That language was also included in the Department of Insurance regulations, but it does leave some discretion to insurance companies as far as how to implement that. And so if there is evidence of or justification for more fire risk reduction from tempered glass versus non-tempered glass, then that's something that insurance companies can include. It is something where different companies are going to approach this with differently, and there's also sort of research resources like IBHS who've published how they came to their conclusion, and I think that that's risk reduction research, and that can inform insurers in terms of how they approach windows themselves.
Yeah. All right. I have one more question before we get to Joel, and I have to preface it by saying, one of the reasons I put that slide in my little deck about there's no one person to blame is that when I had, last week I had a conversation with a very high ranking official with USAA and asking, gee, what can we do to get, we love your 5% discount for Firewise community residents, but could we get it a little higher? Because to be really honest, 5% is not going to move the needle for most households in terms of, reducing the pain of the price. And, of course, she blames, she's like, well, we need more rate increases faster from California, right? Which, of course, to all of us feels a little, or most of us feels a little ironic, given how this question, hi, Jen with Rebuild Paradise Foundation, we're having rate increases here going from $2,500 a year to over $11,000 and as much as $21,000. This included people who have the IBHS wildfire prepared home. So how and why are these dramatic rate increases being allowed? I know that's a tough question, Mike, but it's on a lot of people's minds.
No, thanks for the question. No, it's a very it's top of people's minds, and the reality is there that these rate increases have been really challenging for communities across the state the past 4 years. I think there's no doubt about that. Each of the rate filings that comes through and those increases go through the department's process, and so the insurance companies have to justify that rate increase, and that, given the severity of the wildfires from the past 4 years, there's a lot of losses that have occurred, and that provides significant justification for these rate filings. And so it becomes a real challenge, but the department has a process, and we scrutinize the rate filings. And there's also the challenge that, this group knows this really well. You've been focused on this so much that, as those rate filings come through, like that is an important step for insurance companies to also keep writing policies. And so from the department's perspective, the clearest pathway to both reducing the price increases and making communities more insurable is to be able to demonstrate that this risk reduction works, and it reduces future losses, and we all become safer. And that's the driving factor behind all of these, behind much of this wildfire related rate increases. So it's not a short path, but it's the right path to try to demonstrate through home hardening and community mitigation that we can reduce these losses. Those losses start to come down, and then that's also what will make the communities more insurable. So but no, the situation you bring up, it's real, and I think it's very challenging.
Yeah, to say that you guys aren't granting enough rate increases fast enough seems a little hard to swallow. Okay, Joel Loucher, what's your question? Thank you.
Yeah, I just wanted to add a couple answers, I guess, to some of the questions that people have asked. One that we've talked about a little bit is how big these discounts are going to be. And I would say one thing that comes up in any rate process is there's a little phrasing, what's measured is counted, or what's collected is reflected. So insurers may not have been collecting this detail of information about every home. And so this is new to them. And when that happens, what they're likely to implement is just really a placeholder. And since they're obligated to give a discount, it will be fairly small in the beginning. And then it proves itself over time, right? The data hopefully will prove how valuable the mitigation steps are. And the more impact those mitigation steps have on losses, the bigger the discounts will become. So that's just one thing for people to remember. As Mike just said, we're on the path, but we're on the early stages of the path, and it'll play out hopefully to all our advantage over time that we're all doing this. One thing I also wanted to add about why there's so many filings, of course, there's not just homeowners, but there's dwelling fire programs that might be submitted separately, or mobile home filings, and of course, all the commercial lines fire filings, because it applies to all those. And those might have multiple iterations of kind of commercial buildings that are grouped together. So it really is an overwhelming task, I think, for the department to get through, and I know they will, but it's a lot at once. So I my guess would have been it will be late fall before we're starting to see really many coming out, and they will generally be small, but we work into it. And I think I think the next iteration will be whether your home is next to other homes that are mitigated, right? That's what insurers are going to look at next. So it's great that there's so many interested communities in doing this, because we're still talking about individual homes, but it's going to be great if your neighbor does it too, because that doubles down for your home. So.
And, thank you. And I think that, the whole the value of this convening and all the folks that have been coming to these meetings. And there's lots more people out there that aren't here or, you know, have been to previous meetings. Or anyway, is that we're, you know, is that we are making progress, you know, from a time not that long ago where, you know, insurers were a little bit talked to the hand because they just did not believe the science and the data. And we're kind of, you know, I mean, it'd be great if we could get through a few more years in California without another, you know, 7,000, 10,000 structure kind of an event. So we're all, I know, rooting for that. But in the meantime, we are on a positive track. You know, that's why I shared the slides of this event was showing, you know, some of these real nuts and bolts things of, you know, we get it. You know, the 5 feet is there's a lot of pain around complying with that. But, you know, I think just like elevating homes that are in flood risk, everybody said, oh, it's going to be hideous if I do that. And then, you know, you start to do some demonstration projects and you show that it can still be attractive and similar, you know. So I just want to remind everybody, you know, a lot of you are having, you know, those of you who are community-based folks, I know it can be very discouraging, you know, with the reluctant homeowners, you know, but the tide is moving in the right direction here. Of information, knowledge, action, funding, coordination. We're all moving in the right direction. So in the chat is a reminder about our next meeting, June 13th, right here, same bat channel. We will be hearing from Paul Lowenthal, who's the Santa Rosa fire marshal, and he'll be sharing some information about their community. They've gotten some BRIC funding in that area, so we'll hear a little bit more about that. And then for those of you who want to help your community, people who are struggling with keeping their homes insured and want to get some shopping help, reminder to register for our upcoming shopping help webinar. And a huge thanks again to Deputy Commissioners Julia and Mike for being here, and to all of you for showing up, sharing and asking great questions, and being committed to, you know, to preserving the quality of life here in California. So with that, I bid you all a good afternoon. That's a wrap. See you in June.
Thanks so much for having us. Good to be with all of you.
Thank you.